You're betting against central banks.
In this huge market, $7.5 trillion turnover every day.
What impact will AI, do you think, have?
It is already increasingly part of our lives, but the question is, will it replace human intervention in markets? And the answer is
Welcome to this edition of Talking Markets, and I'm very pleased to say, well, I'm Michael Wilson, and I'm joined by David Buik, who's an old chum of mine and veteran city commentator.
All those years, isn't it?
All those years, I know. And very pleased to say our special guest is Humphrey Percy, who's chairman of SGM-FX. But we'll come on to that in a moment. Just about foreign exchange, which is FX. You're betting against central banks. You're probably taking a different view every day. What kind of signs do you actually look for? How do you pace yourself?
Well, actually, we're not betting every day. What we're doing is in this huge market, $7.5 trillion turnover every day, with a number of different participants, including the central banks, and in my career, I've been involved in market making, in trading, and in client business. And SGM-Foreign Exchange is a client business. So what we're doing is we're giving clients access to the markets.
Execution as well.
Yeah. And showing them, good prices, but also giving them access to expertise and knowledge and people they wouldn't normally get through their clearing banks.
So we'll come on to what you're doing. Just excuse me, just one second there, but just to continue with that, because this is the meat of it, really, isn't it? I suppose right at the beginning is what sort of knowledge are you able to pass on, if I may ask?
Well, in particular, what's happening in the markets, what has gives them some context. I mean, if you speak to your bank, it's most unlikely you'll ever get the chance to speak to somebody who knows about foreign exchange and about markets, simply because of the size of the banks and the way they're organised. So at best you'll get a very plain vanilla view of the market. From us, what you'll get is the context as to where we are, what is upcoming in terms of economic results, what could move the market, and what's relevant to you. Let's say you're a seller of euros or a buyer of yen or whatever it might be, and we will give you that information and hopefully help you make the best decision for yourself or your company.
Let's go back a little bit, because you've got a terrific CV. I mean, you and I first met years ago when you were at J. Henry Schroder Wagg in not a particularly senior position.
I was Pond Life.
I know, that's pretty much I was. And then you were head of foreign exchange at Barclays and general manager of head of global financial markets at Westdeutsche Landesbank. And you founded Bank of London and the Middle East and set it all up. So you've got immense experience. How did that sort of evolve? And the various people, there must be 3 or 4 people that you met during the course of whatever it was, a 30-year career, that really influenced you, or you listened to, or you were driven by?
Yes, well, I was lucky. I joined Schroder Wagg, as you say, and there, being a fairly patrician merchant bank, the treasury side wasn't particularly prominent, but it was run by Jean Solon, a very urbane and talented and bright Frenchman who came from Société Générale. And I was really fortunate to come under him because he trained me. He gave me my start in the markets and taught me a most fantastic opportunity, really, to learn about the money markets, foreign exchange, the gilt market, commodity markets, currency deposits, euro dollars. It really was a fantastic start for me. And he was, and is, one of the brightest and best. And I still see him all these years later.
I mean, that's marvelous. And moving on to Barclays, where obviously it's much more of a political background, or in those days it rather gave me the impression it was. You got to run foreign exchange. That was, in those days, a pretty young age. Was there anybody particularly that you were influenced by, who you liked, or had you really established your own career path by what you already knew?
Well, there are lots of people I liked, but I was fortunate. I joined Barclays Merchant Bank, which is one of the go-ahead merchant banks in the subsidiary of Barclays, and under the leadership of Lord Camoys. And he was both energetic and entrepreneurial, as was my boss, Peter Kerridge, who was the treasurer. And he was one of the first people to see the opportunities given to markets by exchange-traded derivatives. And he sent me off to Chicago in the early 80s, 1982, when the Eurodollar contract was launched. And that was fantastic, because that meant that not only banks, but companies could take and manage risk much more effectively off balance sheet through the medium of exchange-traded derivatives. And financial futures was what I majored in for some years. And so therefore...
So the opening of life was absolutely fundamental to your quantum leap forward, for want of a better expression.
Yes, I mean, life started off quite slowly, but actually picked up tremendously quickly and became an absolute driving force of the European markets and a partner to the Chicago markets. And of course, derivatives today are completely hardwired into markets for both taking and managing risk.
Why, I'm sure I speak for both of us here, but why is London so preeminent in foreign exchange?
Well, actually, some of the reasons are completely fortuitous. Geography, time zone.
Time zone, yeah.
But people, there's a lot of P's here, plumbing, to settle and trade, you do need what I describe as plumbing, which is basically the operational infrastructure support of markets. And London has become this centre of excellence over many years, from all the time it started as a trading centre in terms of commodities originally, and then over the course of the last few hundred years. And then because of its position, its language and its people, it is the single largest centre for foreign exchange in the world. And I don't know if, just to give you an idea, of that $7.5 trillion a day turnover market, almost 40% is executed in London.
That presumably came about 25 years ago, when people like Chris Jutas was at Deutsche Bank, and before that at Citibank. They had branches all over Europe, didn't they?
Yes.
Which many of them became redundant, didn't they? And everybody focused on London, saying this is ridiculous, having competition from our own branches going all around the world. You hand on to America, you hand on to Asia, and then you hand back to London. Is that roughly the essence?
Yes. Well, we all had many branches. Barclays did, and as did Westdeutsche Landesbank, which I joined after I left Barclays. And WestLB, for example, we operated in 35 countries. And when I took over originally as European treasurer, we had 11 different trading operations in Europe alone. And it wasn't really effective. But those were the days when banks were run on a country-by-country basis, and each country manager was basically in competition with the other country managers, and therefore each one had a treasury operation, each one was competing in the markets. Now clearly that's not a sustainable way to go, and it seems archaic now, but so there was the rationalisation of that, and of course it came down to not only cost efficiencies, but technology advances which made it possible to plug into a centre remotely and to execute business and to serve clients, and as you say, David, to pass positions and risk onto the next time zone.
Yeah.
So, for example, when I was involved in exchange-traded derivatives and interest rate swaps at Barclays, we had a book which, where it started, let's say it started in Japan, which was our main centre in the Far East. That book was passed with all its positions, which Japan had taken on from the USA the night before, to London. And London traded both with Japan, obviously in the same time zone, and also back to New York. When at close of business in London, we handed the risk and the book back to New York, and round the world went. But that's the thing about the foreign exchange market. It is apart from being very large and the largest market, it is the largest continuously traded international market.
Give us an idea of, if I can put it in what must seem very naive to you, but the sort of currency landscape that London now has. Presumably the dollar is still preeminent, is it, internationally? The United States dollar, right?
Yes, yeah. I mean, if you look at the IMF statistics, in terms of reserves, central bank reserves, 60% are held in US dollars. So it gives you an idea, doesn't it? And 20% in euros and 20% split between yuan renminbi, not in this order, sterling, Australian dollars, Canadian dollars, Swiss francs, and the rest of the world currencies. But you mustn't forget with central banks, of course, they've got a lot of gold, and they're buying a lot of gold. In fact, I think they currently hold more than 36,000 tons of gold in central banks.
And also, would the mathematics be much the same in terms of liquidity for US Treasuries? I mean, we're going a bit off piste here now, but it's an interesting question for me to ask you.
Yeah, I think it's probably more valuable to look at actually the turnover in foreign exchange markets, where, of course, now this is a really interesting statistic. If you look at the foreign exchange market as a whole, it's a huge market. I bet you couldn't guess what percentage of all currency trades has a dollar leg. 88%. 88%.
That doesn't surprise me.
So that gives you an idea of
the importance
of the importance of the US dollar. So while there is de-dollarization, and of course the central banks continuing to buy gold, as we've seen just recently, the fact is the dollar is the preeminent currency, as you say.
That's very interesting, isn't it? That gold almost compares itself with the dollar in lots of ways. It's something you never even thought about.
I mean, my God.
Yes, I mean,
It was quite extraordinary.
Yes, but of course it's different in that it's held, it's locked up. I mean, although the reserves go up and down in gold, the fact is what we're talking about in
but the price has gone
market.
up substantially. Say in the last year, what, from $1,600 an ounce to $2,300,
well over
or something
2,000,
like that. Yeah.
2,309, I think, this morning.
Thank you, sir.
I looked. Yeah.
I mean, just taking and moving this on forward, I mean, we've had a very good, more than the thumbnail, a very deep thought out situation. But I want to go on and look at, first and foremost, the fact that when the euro came on in 1999, I think it was, London's Japanese bank said, "Ta-da, I'll see you later," and went back to Japan, and they didn't quote the euro outside of the European area or the US. Has that situation slightly changed? And how important now is the Far East as regards foreign exchange?
Well, it's very important. I mean, it all comes down to liquidity. And when one is running a hedge fund or a large fund or seeking to execute a large order, you look at where it would be best to execute it. And it will depend on the currency, it will depend on the time of when you're trying to execute it, but also in terms of what's coming up. So, for example, if you look at euro-yen, which has been a big move so far this year with the yen depreciating, the Bank of Japan has played an absolutely masterly game in terms of saying, of course, we're not concerned, and then dropping hints. And then, just when the market says that's it, if they're not tapped out clearly, but they're not going to do anything, they're going to let it go. Then they intervened last week, 40 billion. And the yen strengthened quite considerably,
markedly, didn't it?
And then steadied. And then let's see where we go next. But so central bank intervention, you want to be executing transactions where the markets obviously are deepest and where you can do it most easily. And what's happened is that liquidity has basically changed in pattern over the years. And but don't forget, the market's got much, much bigger. So you've got to take it in the right context.
Just before Michael comes back with another question, the renminbi, I mean, nobody's an expert in China. It's all a little bit of a morass as far as I'm concerned. But as their economy grows and grows and grows, we're going to have to pay attention to the renminbi a bit more, aren't we?
Yes.
It's not a big traded currency, is it?
Well, maybe not in terms of percentages of the overall market,
right?
But the renminbi accounts for something like 7% of all transactions. So it's not huge, but that represents a huge amount of business still within this context of the market. And also, of course, you mustn't, we can't ignore the intra-China flows, which are ginormous, which we'll never see.
So we've got no idea of the size at all, really, apart from guesswork.
No, I mean, we get an idea of the People's Bank of China foreign exchange reserves, But as with all things Chinese and statistics, it's never quite clear, is it?
Which neatly brings me on to my next question, really, which is how on earth do you scope, if that's the word, markets like the Chinese market and the Japanese as well, which is they're equally opaque, well, perhaps not as opaque as China, but central banks don't necessarily telegraph what they're going to do they?
No, I mean, all we can do for our clients in the business which I'm involved in now, which is basically an SME and private client business, is give them the best information and as much information as we can to enable them to make the best decisions. But that's the sort of beauty, I suppose, of the size of the market, is that there is so much that you can't know and can't see. But there are these entities such as the IMF, which gives you stats on central bank reserves holdings. There's the BIS study, which comes out every couple of years, which gives a really good handle on who's doing what and what the size of the market is and the different participants. If you break down the participants in the foreign exchange market, apart from central banks, there's the reporting dealers. The reporting dealers are the liquidity providers, the market makers, the Barclays, the CISI banks, those kind of large banks who are not only managing liquidity for themselves as market makers and between themselves, they're also providing liquidity to the other participants in the market. Then you've got the secondary users who are basically smaller banks who are, when I say small, I mean they're not small, but they're not necessarily the largest banks. And they are providing foreign exchange to their clients within their countries or internationally. And then you've got the very important retail business, which basically is providing foreign exchange, as we do, to corporates and to private clients. And then, of course, you've got, in a sort of slightly different sense, you've got the hedge funds who are trading for their own account, and international corporates. So, the BPs of this world have always been large participants in the market.
They had dealing rooms years before many banks did, didn't they?
Yeah, they did. Yeah.
I think one of the things that really excites me is that watching what's been happening in the Middle East, particularly Saudi Arabia and Qatar, who have been flailing away with like a man with no arms and legs to get into other areas apart from oil, because they probably know in 50 years' time, oil will hopefully, as far as the world's concerned, play a less interesting role. How important, Humph, are Saudi riyals and other European countries in Kuwait, Middle Eastern, sorry, I beg your pardon, like Kuwait and Qatar and the rest of it? Is that market growing, and is it very influential now in the professionals' hands rather than, I would say...
I don't know how many questions there are there. But
well, there's loads, I'm sorry.
Let's break it down. I've worked in the Middle East quite a lot, and anyway, Saudi Arabia is head and shoulders above the rest of them, given the size of their economy. And however, it's pretty much a closed economy, as you know, although there are efforts being made, and it's becoming more international now, and the diversification point is absolutely key. The other countries are basically very high net worth per capita countries, but they're not influential in the international markets. And in terms of what they're doing about the oil running out, and of course, 50 years ago we said oil will run out in 50 years, and here we are 50 years later saying it's going to run out in 50 years. But there is great diversification, and in a way it's already happened. If you look at Dubai, the UAE anyway, overall, it's become a trading and business centre. It's become a world city, and you can say, "Oh, come on, what is it?" But it is a very high quality place.
And we spoke to Brian Coyne, who works out there, who's been a very successful trader over the years, and he said, "You would be, not you, but the world would be amazed how important Dubai is now."
It is. Now, what's happening in Saudi Arabia is that MBS is extremely far-sighted and extremely able to get his way, and his way is to invest in this NEOM, which you may have heard about. Now, you wouldn't really bet against that, because the Public Investment Fund, which is Saudi Arabia's reserve fund, is putting in $500 billion to make NEOM a reality.
God.
So, I mean, we're talking about, big numbers here because they know they need to diversify. Now, interestingly, what's happened in Saudi Arabia is that 5-10 years ago, there was this sense that there was going to be an increasingly wide gulf between the rich and the rest in Saudi Arabia. And MBS has actually changed that perception.
Just for people that think, MBS stands for?
Mohammed bin Said, the
Sorry.
ruler.
Yeah.
Crown Prince. And he is basically, he's implemented changes, huge changes in a very short space of time. And that is why you will read about Saudi Arabia joining the BRICS, the new BRICS.
BRICS, yeah. And it's going to be very, very significant. Michael?
Yes. I'm sorry about this in advance. AI, we must, because, I mean, your whole profession is presumably waiting for somebody to tell them exactly what that's. I mean, you feed information and you get information out all the. No, so what impact will AI, do you think, have on your sort of business?
Horrible question. Got to ask it.
In a way, it's already happened and happening. In that, machine learning. If you think about whether you go onto an app or a site and you're asked to take a decision and that leads you to the next decision, that is machine learning. That is basically automation. And for years, let's take the foreign exchange market to answer your question. For years in the foreign exchange market, people have been writing algorithms. They've been writing algorithms. If this happens, buy dollars. If this happens, take profit in US treasuries. If this happens, invest more in the
It's like program trades, isn't it?
It's
really?
like program trading, exactly. And so, yes, it is already increasingly part of our lives, and it's definitely part of markets. And it's also creating efficiencies and is part of the operational infrastructure. But the question is, will it replace human intervention in markets? And the answer is no, it won't replace it, but what it will do, it will assist people to make better decisions more quickly, more efficiently, and be able to crunch ever-increasing amounts of information.
Which you feel confident about, do you? I mean, because...
Worried about fraud, I mean...
Well, extra information is all good and all well.
There's this terrible saying, which of course, you put rubbish in, you get rubbish out.
Yeah.
I mean, that is the danger. And the other thing, of course, as we've seen in markets on sort of meltdown days, in stock market crashes and so on, you get this polarization of trading where everybody has got the same thing. If it gets to this level, sell. So everyone sells, and it gets worse because it gets to the next level.
It's exacerbated, isn't it?
And you sell again. But I think with capital controls that are in place, institutions being better capitalised, greater understanding, greater safeguards, it's just something we have to live with. So if you want the operational efficiencies, then the other side of the coin is you will be exposed with bad actors or human error to errors.
I keep thinking about Dr. Google.
I know.
It's the same kind of thing. You actually just want somebody to sit there and say, don't take any notice of that, just do this.
Yeah. Well,
that's your job.
I mean, but the concept of, David, you'll remember this from markets, the fat finger, where someone,
puts the wrong...
either an elbow or a hand or a glass or whatever it is on their keyboard, and they end up selling $6 billion worth of a stock,
which they don't have.
There's only, there we are,
I mean, brings me to next and coming towards the final question. I want to talk a little bit about regulation because foreign exchange is such a massive market. The central banks have, in my opinion, had quite a decent handle on it, but as things like AI come on board, are the central banks, in your opinion, geared up to cope with the extra knowledge and information that they actually are going to require to do a decent job? Horrible question, but
I don't know enough to be able to answer that question. But what I can say is that the degree of investment that would need to be made in the central bank would mean they would have some really expensive people. And I don't see any sign of that.
No, that's my point.
The
banks have always been ahead of the game
Yeah.
in getting people in compliance, haven't they, in regulation, ahead of the central banks and also the regulatory authorities. And they've never caught up, I don't think.
Well, I look at it slightly differently. I'd say that actually that regulation has been sort of an incoming tide for the last few years, and regulators have forced banks to up their game, and banks have had to. I mean,
Comply, yeah.
now you'd be absolutely amazed how much a seasoned compliance professional can command, or a seasoned risk management professional can command. Much the same, basically, as the very top traders in the case of risk people, and in compliance, the very top executives.
Yeah.
Now, regulation overall has been beneficial for markets. Overall, it's been better because we've put in place better capital ratios and better rules, and also it's weeded out, some bad practices, some bad actors over time, and it will continue to do so. But of course, each of the regulators, I won't say it's an arms race, but it does actually develop very, very quickly. Now, foreign exchange, for example, was lightly regulated when I set up this business 22 years ago. Now it is pretty heavily regulated, and quite rightly, because you're dealing with people.
I think that's actually very reassuring.
Yeah.
Very reassuring. Just developing a variation on a theme, going back to your retail market, which seems to me in the course of the last 10 years exploded, and banks now look to you because you are more than serious competition, because your prices are very much more competitive than theirs are. I take it that you can provide all the knowledge in the world and all the assistance, but are you allowed to give advice?
No, we don't give advice.
That's what I thought. Yeah.
No, well, you can give advice, but that's a different permission. Basically, it's a different.
You have to be
permission
regulated specifically.
We are regulated within the payment services regulations, and that allows us to do all foreign exchange with all kinds of clients and make payments. And then there are different kinds of payments you can make within that regulatory regime. But essentially, that is, I think it's a good discipline. And I was taught at the very beginning of my career that if you can't explain something, you probably don't know what
you're talking about.
Exactly.
Yeah.
So when it comes to the regulatory regime that applies to my part of the foreign exchange market, I think it's something, first of all, we foresaw, but certainly something we welcomed, because it meant that if we could comply with it, we'll be part of a smaller group of people who are actually competing with each other.
I'm just going to slot one other thing to Humphrey, just so that we can explain. Apart from property, the buying and selling of foreign exchange, of foreign securities, and holidays and things, what's the role of your business?
Most of our business actually is to provide foreign exchange to asset managers, to international companies, to corporate treasurers who are hedging or acquiring assets or disposing of those assets, translating profits. And then, of course, there are the private clients who are acquiring assets, as you say. It might be property, or it might be other kinds of assets, investments, savings, and so forth. And we do increasingly a lot of business in terms of corporate finance type transactions, where there's a corporate event with the acquisition of a company, for example, by a foreign company. And we do the due diligence, and we do the foreign exchange, and we divest the proceeds pro rata to the different shareholders. So, it's quite a varied landscape these days.
Terrific. Can't thank you enough. It's been a great pleasure, and we've learned a lot. Pleasure, sir.
Humphrey Percy, thank you very much indeed for joining us. And that brings us to the end of this edition of Talking Markets. David and I will be back in a week's time. See you then.